From why the Bank of England is in a bind to prospects of a happy earnings season for US banks. These are the stories to watch in business and finance in the coming week. With Britain's economy stagnating and inflation rebounding to an 8-month high, the Bank of England is in a bind. The British pound is also sinking, and 30-year bond yields are at their highest in over a quarter of a century. Consumer price data due Wednesday will show whether the Labour government's public sector pay rises and tax hikes on employers have made the risks of monetary easing unbearable. U.S. inflation data is also set for a Wednesday release. In December, the Fed projected only 2 rate cuts this year, as it braced for higher inflation than it previously estimated. A hot inflation number could further lift Treasury yields, whose swift ascent in recent weeks has rattled asset prices. It's expected to be confirmed on January 17th that China's stimulus-fueled fight against deflationary forces allowed it to achieve its 2024 growth target. But even if it did hit 5%, Donald Trump's return to the White House and his threat of 60% tariffs will bring a much bigger battle. Beijing is already erecting defenses. U.S. banks should be set for a happy earnings season on the back of robust investment banking fees, strong trading income, and easing pressure to boost deposit rates. J.P. Morgan, Wells Fargo, Citigroup, and Goldman Sachs will kick off earnings on Wednesday. Bank of America and Morgan Stanley report results on Thursday. Much scrutiny will be on the outlook for net interest income, the difference between what banks earn from loans and what they pay for deposits.